Hello everybody, I am Attila Tanner. Welcome to a brand new video of Next Talk. I hope you're all doing well. It's been 3 weeks since the last video, so we are due for an update. Today's video, we're going to go over the highlights of companies that recently reported. Then we're going to go into the Q2 results of the different indexes. We're going to also do a backtest to see how our first picks from the first video has been performing in the different categories. After that, we're going to do our regular reporting. So let's start. We start with the highlights. Accenture had an 8% year-over-year sales growth. Our price target for them has been lowered to $341, but there is still an upside for Accenture. Micron had an impressive 37% year-over-year sales growth. Our price target for them remains the same at $129. Nike had a 12% year-over-year sales decline, so our price target for them has been lowered to $54, and they're trading higher than that. We can also look into a Canadian company, Alimentation Couche-Tard, had a 6% year-over-year sales decline, and our price target for them has been lowered to $69 Canadian. The others was in US. All right, if you're curious about other price targets, you can check it out on nexttalk.ca, which is my new website, which is now launched, so I'm very happy about it. So if you go there, you will be able to see all the features that we are offering, and you have, of course, a 30-day free access to the platform. So yeah, check it out. Now, we're going to go into the different indexes, how they perform in Q2. And in general speaking, all indexes performed really well in Q2, as you will see. S&P 500, for instance, they were up 10.6% in Q2, making up the losses from Q1, and now year to date is up 5.5%. Nasdaq is also up 5.5% for the year after a fantastic Q2 of 17.7% up for Q2. Dow Jones Index, similar, 5.4% for the year, also because the Q2 they were up 6.7%, making up the losses from Q1. TSX Index was plus, barely plus on Q1, and they added to it by 7.8% in Q2, making it 8.6% in total. So overall, we can see that the Q2 was great. So let's see how Q3 will be. Now, we're going to look at accuracy. This is when we're doing a little bit of back testing every 3 months. So when we come to the price targets for, let's say, the US stocks, we had a 95% accuracy, which is 5% better than last time around. For the Canadians, we were down 5% to 91%. So what does it mean? So let's say when we have in, let's say, 95%, it means in 5% of the cases, the stock actually went the opposite direction. So if you said buy and it became a sell, or we said buy, it became, we said sell and became a buy, let's say, right? So those becomes a negative for it, and that reflects it in our numbers. So of course the ambition is to make it 100%, but you know, sometimes we cannot control external factors too. But that's the point, to improve the formulas. Now, if you look at the different categories, how they performed, because that's kind of interesting as well. So the value stocks we had from the first video of the year for US and Canada in average was up 4.8% year to date. And this is good numbers to compare with the other indexes. Canadian and the US performed similarly. The dividends we had in the first video, they performed really well, 14.1% up. The US performed much better than the Canadians. And the growth category performed fantastic, 49% up year to date. And the Canadian performed better than the US, but still really good upswing on the growth category. Attractive ones, where we have our next stock formulas, also performed really well, 26% up. And the Canadians performed better than the US. Pricey category, which we are a little bit cautioned about, they also still went good by 12% up. US and Canadian were about similar. All right, so that's our back testing for this time around, and every 3 months we will go back and see how things are progressing from our first pick. Now, let's go into the regular reporting. We start with the US market and the value stocks there. Top 3 at the moment, ExxonMobil, Bank of America, and United Health. So here we're looking at high market cap companies with low price to earning. Those companies are supposed to give you stability in your portfolio since they are large and they are profitable. So dividends also can be interesting to have in your portfolio since they're giving cash back. So top 3 at the moment are Pfizer, Ford, and Verizon. And the growth category that is performing so well so far is XPeng, Nvidia, and Robinhood is the top 3. Attractive is here where we're using our next stock formulas, where we're comparing sales growth with stock price growth. We're also looking at trends, we're also comparing with price to sale ratios, etc. So United Health comes up top, Elevance Health is on spot number 2, and NIO is on spot number 3. On the Pricey category, which is the complete reverse order of it, that's if the stock price is going faster than the sales. So Jumia Technologies is on spot number 1, Cloudflare is on spot number 2, mainly because of their high price to sell ratio. Newcomer Robinhood is on spot number 3, and as you remember, their sales growth was 50%, but the stock price has been up 364%. So our formulas picks that up as a pricey one, so they're in the list. Arm, who was in the list, is out from top 3. All right, that's the US. Let's dive into the Canadian market. Start with the value stocks there. Top 3 at the moment, Royal Bank, TD Bank, and Bank of Montreal. Dividends in the Canadian market, we have a little bit of a shake-up there. Whitecap Resources moves up to spot number 1, TELUS moves up to spot number 2, and Bell drops down to spot number 3. Growth category in the Canadian market, Endeavour Mining is on spot number 1. Enbridge is on spot number 2, and Wheaton Precious Metal is on spot number 3. Attractive ones in the Canadian market, Ivanhoe Mines is the top spot. Endeavour Mining is on spot number 2. They are also, as you remember, from the growth category. And we have a newcomer in Pembina Pipeline in spot number 3. Capstone Copper, who was in the list, is out from top 3. And finally, the Pricey category in the Canadian market, Celestica retains the top spot. Aritzia moves up to spot number 2, and we have a newcomer in Air Canada in spot number 3. BRP, who was in the list before, is out from top 3. All right, this concludes the report for this time around. If you like those videos, please like and subscribe so you don't miss out on the next one, hopefully in 3 weeks' time. At that time, we're going to also look a little bit into mergers and acquisitions, what's happening in that space. We do that every 3 months. Meanwhile, I'm also in the socials like Blue Sky or now Instagram as well, so you can check that out. But of course, you can go to the nextstock.ca website as well. That would be nice. And meanwhile, always gather a lot of information before jumping ahead purchasing stocks. Until next time, bye-bye.